right here, you can't quite see it, but right here, I got 50 shares at 28.915 at a cost of 1,445. Okay. Then I took, so now we start entering everything. I took a -3, took 3 shares out at 30.24. Okay. So already at that point, my original entry was 28.915, but by selling some, I'm making some profit of $90. I reduced my cost basis actually to 28.83. But in Thinkorswim or in your broker, it will still show your cost basis as 28.9015 where you bought it. See, the broker's only showing you your bought cost average. It's not factoring in your profiting. When you factor in your profiting, you can actually find out that you've reduced your cost basis some. And I told you, like, a great example is when you buy 50 shares, when you buy 100 shares of something, and then the stock price doubles, and you sell 50 shares, your cost basis is now 0, right? You got back all your money, and now you still have 50 shares at a cost basis of 0. It's all profit. It's all in the house. Okay, so this is what I'm talking about. Your cost basis goes down. The price of your cost basis goes down as you sell, as you take profits. All right, now, okay, let me keep going. 3048, because there's quite a few transactions. Let's keep going. And you're going to see this cost basis over here start to go down. You're going to see the open number of shares go down too. You're going to see the cost basis, as I keep taking profits, go down more and more. And so the number of shares that you have open as well will go down. But it's like you have that many shares at the open cost basis price. Okay, minus 3, 33.23, minus 3 at 33.17. Minus 2 at 33.23. I don't know why these are all at the same price. That's kind of interestingly weird. Minus 3 at 33.23. Not sure what happened there, but I sold a whole lot right at the same price. Minus 3 at 33.23. Minus 3 at 33.17. And again, minus 3 at 33.23. So up to that point, before I added on the 15 that's about to happen, up to that point, now through profiting, I've reduced my cost basis from 28.915 to 25.1932. And I'm still holding 25 shares really at that price. So now the price is the stock is at 34. Let's call it, okay, on the chart here. And I want to add on at that moment, right? It's at 34. Now, but I have 25 shares. The system will say at 28.915. But actually, if you want to figure out where I'm at profit-wise and how well I'm doing on this trade, you need to use your reduced cost basis price. You have 25 shares at 25.193, okay? And so let's say it's at 34 today. Not today, but back in the chart where I bought 15 more. Then you're saying, okay, it's at 34, and my reduced cost basis is 25 point, what was it? Get out of the way. Thing. Okay. 25.192. 1932. Which means that the stock has gone up 8.8 points, prices increase, from the 25 share cost basis levels that I'm still holding. So times 25 shares means I'm up $220. Like in reality, right? But in the system, it will say that I have 25 shares at 28.915. And therefore, I'm up $127. $127, but really I'm up $220, you see? And that's a matter of chipping away at the top of the rock, adding to the profit pile on the bottom, stepping on that profit pile and moving up. But you won't see that as your current position. It won't show up that way in Thinkorswim. Anyway, moving on, let's keep going. So then I bought 15, and what's that going to do? It's going to raise my cost basis. My cost basis was 25.1932. The real cost basis is 25.1932. But now I'm buying 15 shares right there at 34.255, and boom, my cost basis now pops up to 28.59. Which is still lower than I originally got in. But Thinkorswim will say it's at around 31, which is where I wrote it here. It may be hard for you to wrap your mind around this, but it's simply that we've taken profits, and so our actual cost basis is lower than what the brokerages would tell you, and that's because it's not telling you your open cost basis, your running cost basis, including profiting. It's telling you only your purchased prices cost basis. Okay, and I'm starting to take out profits. You can see, and I'm typing these transactions happened. 36.47. Another two at 37.17. And you can see my cost basis is going down every time. Look at that. It's now down to 26.71. Taking out 2 at 37.87. 25.95 now. So you can start to see it go down. Another 2 at 37 is good. 38.57. Another 2 at 39.27. Let me do this. I can freeze these two, and so we can scroll down. Okay. And so then we can scroll down, and it won't change any of that. So you can see now my cost basis is all the way down to 23.98 now. And I'm still taking out profits. This is the power, Randy. This is what I'm really showing you. This is the miracle integration of a 2-to-1 50%ing puzzle piece as part of your strategy. Okay, 39.96. Okay, so my cost basis is now down to 22.64, holding 24 shares still. The system thinks my cost basis is 31. It says 28.915 there. I guess I could make it recalculate that, but no. It's just that in Thinkorswim or in your brokerage, it'll say around 31 because that's what you engineered your add-on to. We talk about how to do that. Yeah, it is kind of magical. It'll say 31, but actually you have 24 shares at 22.65. So now we're going to add on again up here at 40. But before we do, I want to show you that now we have 24 shares that from 40 minus 22 our new cost basis of 64895,833 means we're up $416 all in all. But the system, brokerage I'm talking about, Thinkorswim, Schwab, will tell you that you're currently up from 31 and that you're up $216. And so I've built in a kind of psychology to the system, which is that you're going to feel good about being up $216. Like, the system works at the face of it, but there's also this hidden hidden magical underbelly that you don't want to be spending all the time doing the math on like I'm doing here, but that you can trust. And that's that you've been skimming profits along the way. And you haven't been factoring that in to how good or bad you feel about where the position's at right now, because it only shows in Schwab or wherever that you're up $216, when actually you are up $416. All right. So then we add on 7 shares and we take some more partial profit. So now we add on 7. I can say plus 7. And we add on 7. Oh, as a matter of fact, I got those at different prices. So let's make that perfect. I got 1 at 39.7. You're going to see the cost average of the 21,743 start to go up now. And I got 2 shares at 39.76. And then I got 2 more shares at 39.76. Then I got a total of 2 more shares at 39.71. Okay. So now that completes that purchasing of where it says plus 7. And that puts our cost basis, our real cost basis, of 26.5 with 31 shares. So we've increased our size. Our cost basis did go up a little bit. Remember on the calculation here, it was at 22.64. So granted, $416 of profit, right? But we've increased our size. So let's write that in though. Our cost basis is now, we're still at $40 theoretically in the stock price up there. But our cost basis now that we added on has been raised. We raised our real all-in-all cost basis to 26.50983871. But we have 31 shares. And look at that, $418.19. So I say it roughly came out to exactly the same difference. It didn't make a difference whether you added on and increased your open cost basis and now have more shares, and the difference between that new point and where you're at is such and such profit. Or if you didn't add on and you kept your lower cost basis, and the difference between the lower cost basis and where you are right now times the fewer shares gives you more money. It turns out to be exactly the same though, because it doesn't make any difference. It doesn't make a difference when you add on, as far as in that, just that mathematical calculation there. Okay. Now we took 3 profit. We hit 3 profits. So that'll reduce our cost basis. We're going the other way again now. It's kind of cool. We took 2 at 39.99. Cost basis went way down there. Did you see that? Look, 28.338, 26.5 is where we are. Okay. And then all of a sudden I took 26.5. Remember that number. I took 2 out at 39.99. That brought us down to 25.5. What was the other number? I already forgot. 26.5. Okay. It brought it down $1. All right. And took off 2 shares. And then we took out another 2 at 41.89. And now we're at 24.4. Took off another $1 off our cost basis. And then we took another 2 off at 42.99. And now we have 25 shares at 22.8826. So where are we now? Let's take a look. We have 25 shares and a reduced cost basis, all in all, of 22.8826. All right, so we're up $428 sitting on 25 shares. Fine. But the interesting thing is, the system thinks Schwab thinks our break even is 34. So it thinks our profit is $150. That's what it will show. But really, we've been profiting. When you factor that in, you're not up $150. You're up $430. But we just keep this profit as like background subconscious. It's like subconscious success, subconscious money making. You don't have to worry about it. It's happening in the background. Now, what I just did is we just added 3 shares on Robinhood. And so now we're going to finally be able to figure that out. So I added 1 at 43.06. Our cost basis is going up. And we added 1 at 43.07. Our cost basis is going up. And we added 1 more. We added 3 at 43.13. Okay, so here's where we're at. Our cost basis is $25.047. That's our real cost basis. We are essentially holding 28 shares at 25. But the system shows 28 shares at 36. See, Schwab will show you the kind of the wrong information, and it shows that we're up $181 or 3 or whatever. But really, we are up. Let's do the math here. 25.04732143. I might as well put it all in there. And we have 28 shares from there. We're up that same number, the $418. We're not up. So look at the difference between this number, how much you really have profited from the venture of swing trading, snowballing, system, AMASS system, how much you're really up versus how much the system's telling you you're up, how much Schwab, your brokerage, will tell you you're up. And that's because Schwab is not telling you how much you've made this year, all in all, on that stock. I think possibly you can show that, though. Hang on one second, guys. I think it does have that. Hold on. Maybe not, but let's see. No, it doesn't. Profit loss day, profit loss open, day only. Yeah, average price. No. Yeah, it doesn't have that over there. And then over in your P&L panel, maybe it does. Yeah, I've put P&L year to date as a column. That's one that you can add. And although it may sometimes not be what is real, because it's only figuring from year to date. And for me, that wouldn't be correct on this position because it's not factoring in last year's, I got in this in November. So, but for example, on what is this one again? Robinhood. It shows year-to-date profit as $130. So, yeah, that just doesn't line up. So, you can't, there'll be a point where you started something, a position on something this year, and PL year to date will accurately reflect that number of like $418. But yeah, does it kind of make sense now? What's happening? It is kind of a magic. What I did want to do is I wanted to put that on the chart. One second. Oh, there's the... Okay. So my cost basis, my open cost basis is 25.05. 25.05. So I'm going to put that. Watch what the difference is. I'm showing a breaking of 36. but the real cost basis is 25.05. I would categorize that into what I would call shocking. Shockingly different. Real break even is 25.07. That's where I give back everything I've made on this thing. You think it was at your break even that the brokerage is showing you, but that didn't factor in all the money you made that created a reduced cost basis all the way down to 25.07. And that's going to keep going. And again, and this kind of goes towards why you don't want to choke off these trades, because they're working. They're actually working better than it looks. So you don't have to be too defensive with them. You can allow them to breathe, because you're already better than you think you are on it, because that subconscious background cost reduction that's going on the whole endeavor. All right. Well, maybe that'll be what we cover in masterclass, but I just did it, but maybe that's what we'll cover in masterclass. And any questions? If you're out there and you were listening, say thanks or bye or thank you, TY, whatever. And that's it for the morning program. Thanks for tuning in, everybody. And if you had any questions, I know you're good. Okay. I'll see you back in the group. All right. Thanks a bunch, everybody. The miracle, the magic, it's definitely magical. Yeah. You have to be so careful with it, because you don't want to use your real cost basis as your break even. You just want it there as reassurance, because if you do, then you're setting yourself up to give back all of your gains. In exchange for a much larger position, though. However, if you always are willing to give back all of your gains, you will never make money. So when you find something that gives you an edge that allows you to be greedy, you have to be really careful that you don't maximize greed, because a lot of greed thinking makes you want to push it to maximum greed, to where it can be maximum, and that breaks the systems down. But I will tell you this, that probably there is some kind of compromise. There's probably a compromise between max greed and what's going on here. But I think it's good enough. What I'm going to work on this year on it, continue to refine that system, is seeing if starting with a larger size pilot adds risk, or if it actually increases gains faster. Because it does add risk, but the thing is, it might be proportional, and so it doesn't change the end result. And so that I'm going to be experimenting with that this year. I hate experimenting, but I have a feeling. My intuition, my mathematical intuition says that you can start at a larger size. However, the 2 times that I've experimented with doing that in the last month, both of those trades didn't work out. But, maybe that was just because of the weather, the market weather. All right, guys, take care, and I'll see you back in the group.